In compliance with public law 24-109, Guam Ancestral Lands Commission published a public meeting announcement for Thursday, September 29, 2022 in the Guam Daily Post, on Thursday, September 22, 2022, and Tuesday, September 27, 2022. Director, roll call.
Okay. Thank you, Mr. Chair. Okay, Chairman Eclavea,
Present.
Vice Chairman Laguatnia,
Yeah. Here.
Secretary Treasurer Cruz. I got you, Vice Chair. Secretary Treasurer Cruz. Mr. Chair, the Secretary Treasurer Cruz informed me that she'll be logging in later on today in about 45 minutes.
Noted.
Okay, Commissioner Camacho,
Here.
Commissioner Orlino,
Here.
Commissioner Rios. Okay, Mr. Chair, I'm not sure if Commissioner Rios is back on island. He hasn't responded.
Noted.
Okay, and Commissioner Wessling.
Here.
Thank you, Commissioner. Mr. Chair, five commissioners present. You have a quorum.
Sujus Master Director. Okay, we're gonna move down to item number 3, GALC Investment Policy Statement.
Okay, thank you, Mr. Chair. Initially, what we wanted was to establish or set up a strategic planning work session so that we can work on our investment policy statement. But the commission decided to have this special meeting first. But basically, well, we have Gita here, who I feel will take charge of this and move forward to explain to the commissioners why we need to sit down and work out a strategy on how we're going to do our investments, which will provide us guidelines for each of our investment portfolios. Because what we're doing here is we want to make sure that we attain a higher rate of return on our investments. But we haven't done this before. It's new to us. So we're going to try to, well, we're pretty much going to learn this on the way. And of course, we have representatives here from Raymond James, Mr. Jason Mayashita. I hope I got that correct. And Amanda Gima. I hope I have that correct, Amanda. Thank you. And of course, we have Mel Mendiola, the CEO of GITA, here, along with many of her staff. And of course, others here from the Ancestral Land staff and our legal counsel, Nicholas Tuff. So with that, I'd like to turn it over to Mel, and hopefully we can find a way that we could invest our funds where we get a higher rate of return and get us started on our working on our investment strategy. At least let's come up with a strategic plan that will take us a few hours, a lot more than what this special meeting will be. So, Mr. Chair, if it's fine with you, could we turn it over to Mel Mendiola?
Yes, very good. Very good. Mel, buenas.
Buenas, half a day. Good afternoon, everyone. Again, my name is Mel Mendiola, the CEO Administrator of the Guam Economic Development Authority. And I wanted to thank you all for gathering today for this particular meeting. I did want to do a few introductions. Joining us from Raymond James is Jason Miasha, almost Director Birch, and Amanda Gima, also from Raymond James. And then GITA has 2 investment advisors. We have Raymond James and we have Bank of Guam Investment Services, BGIS. Will BGIS be joining? I don't think so. Yeah, we don't think. I don't think BGIS was able to join today. Nonetheless, that's fine. We can press forward without them present. Before I wanted to give the floor to Jason and Amanda to provide some introductions to all of the board members. The recommendation of GITA was that a couple board members and Director Birch be nominated or volunteered to sit on an investment committee. And then that way, things like the investment policy statement, annual review or quarterly reviews of performance, and things along those lines could be vetted, researched, and worked through. And then that way, when it got to the board level, it was a more strategic type of meeting wherein the investment committee could say, the many hours of work that we put in, these are all the things we discussed, and this is what we vetted, this is what we're comfortable with, this is our recommendation to the board, and then the board then make a motion. So I would recommend, I stick to that recommendation. You know, something like this, the investment policy statement that we're going to go through today is nearly 20 pages long. It's kind of dense as far as, you know, the information is really not exciting, scintillating reads. It's not Danielle Steele.
Yeah.
You know, this is very boring. And that's why usually you put the 2 or 3 nerds that like this kind of stuff, you make them read it and then come and give you guys the recommendations. And so that's what I would recommend for this process. Nonetheless, it is very helpful to have the team here to, number one, so you get to know them, you know, FaceTime, so that you know that who your resources are, why reach out to them, and generally give you an up-to-date a state of the markets, if you will, so that we can all press forward with you know, clear head as far as how to proceed with the IPS. So with that, Mr. Chair, would you be okay if we turned it over to Jason and Amanda for their comments?
Yes, very good. Unless the board has any other questions or comments at this time? No? Okay.
All right. And Jason, if you can also explain, so, you know, of course, do your introductions, but explain why your clients, how they utilize an IPS, what goes into the construction, how often it's updated and stuff. You know, talk about the IPS in particular after you're done with your intro.
Okay. Thank you, Mel, Chair and Commissioners, and of course, Director Birch. Good to see everyone again. Hafide, good afternoon. My name is Jason Miashta. For those of you who don't know me, I'm one of the managing partners here in the Raymond James Guam office. We also have a partner here, Amanda Gima, who's actually going to be doing most of the presentation today. But this is, you know, it's good that we're all sitting down doing essentially a heart-to-heart on, you know, why get into the markets, right? The markets have been very turbulent this year. And Mel knows, because we've been investing Gita money already. But, you know, through other investments that we have across this region, it has been a wild ride, especially this year. And, you know, what's causing that? Obviously, you hear the news, you have inflation, you have interest rates. You know, we just had an interest rate hike this week. We're expecting another one next month to battle the inflation numbers. The dollar is very strong. The markets are coming down. The markets actually picked up today, but it's going to be up and down, at least at the end of the year, especially when we're watching the midterm elections in November in the US. So we're hoping to end up positive, if not break even this year, but we have some work to do in the markets to get back to it. So, you know, we don't think we're in a recession right now, frankly, although it may feel like it, you know, given where prices are and the buying power and spending out. But, you know, just go to the restaurants everywhere here. I've been doing a lot of dining this last week because I have some regional management team in town, and the restaurants are crowded. The flights are full. You know, especially in the US. Asian markets are opening up, so that's good news for us as well as them. But it is a turbulent market. But in all this turbulence, what's important is to have that plan and to not what we call Monday morning quarterback in terms of making irrational decisions and sell when it's the worst time and buy when it's the worst time, right? Our goal is to buy when it's the best time and sell when it's the best time. And that's how you make money. But this short term that we're seeing right now over this last, I would say 8 months has been a pretty volatile ride. So many of you who have retirement funds, many of you have investment funds, it has been a challenge this year in the markets. And not every year you're going to make money. That's one of the disclaimers that we have, you know, in working with investment advisors is that, you know, these investments are not guaranteed. They're not, you know, past performance is no guarantee of future performance. We do believe it's a good time to be investing, especially when the markets are down. Warren Buffett has a great quote, be fearful when others are greedy and be greedy when others are fearful. This is a time to be greedy. And, you know, coming from cash, maybe not putting everything one time into the markets, but actually slowly getting in, dollar cost averaging into the markets. This is how you will succeed and you will make money in the long term. And we're looking at starting the perpetual trust fund essentially here for the Guam Ancestral Land Commission. And this is something where you actually have the opportunity to get in at really good times and really good valuations in the market. So, this is this first step. This is the business plan. This is the flight plan, investment plan of how we're going to be managing. We don't make any investment decisions, nor do we invest a single dollar until the entire board, with recommendations by the investment committee of your commission, makes that decision to invest. And and on the flip side, you don't change investments unless the entire board is actually agreed upon it. Now you can not vote, you can abstain and things like that, but you have to collectively agree as a board to invest. So it's not like you're just going to be buying stocks day in, day out, or buying bonds day in, day out. We're trying to develop a policy. We're developing an investment plan to ride out volatile markets and to stick with our plan, especially right now for those of our clients. It's like Gita, for example, we're telling them to stay the course, and you don't want to be selling. You don't want to be going to cash because it's two investment decisions you're making. One to sell, that's real easy, but the question is to buy back. And that's where most people get it wrong. It's that second decision. But if you stay the course, or even if you do the opposite, add money when it's times are rocky like right now, this is where you will make money in the long term. So I'm going to preface that. We actually put together a draft investment policy statement already. We sent it out to Director Birch. I'm not sure if the commissioners have had a chance to review it. As Mel mentioned, it is a quite lengthy document. It's a boilerplate type language with all of our legal guidance in there. But this is something that we do with any relationship that we start out with first. We design an investment policy, and then we look at options with the board and the commission, and then we decide to invest, and then we actually invest that first dollar. So I'm going to turn it over to Amanda. First of all, any initial questions from the commissioners or Director Birch? Any initial questions before we go in? I'm not sure we're going to be going through the investment policy, the whole thing today, Mel. I don't know if that's something that you want us to do. We can, but we really are here to help you and advise you, to help you get this process started. And this is the starting point.
Okay. All right. How about we go with Amanda first, and then we'll talk a little bit about how the rest of the meeting will go with, we'll consult with the board and Director Birch.
Okay, I'll turn it over to Amanda.
Hi, my name is Amanda Gima. I am the junior partner at the Raymond James Asia Pacific Group here in Guam. I'll be one of the people that you would reach out to if you have any questions about the IPS or your investments. Also one of the people that you'll see at your meetings when you do decide to move forward with investing. I'm not going to talk too much about the IPS, as I believe that's what is on the agenda today, but I look forward to working with you. And I'll turn it right back over to Mel.
Okay, thank you. So I wasn't present at the last meeting, Director Birch, but I did want to just find out, what did you want to go through page by page on the IPS? Was that what the board was wanting to do today? What do you think you'd like to do?
I hope not. That it's a pretty lengthy document. I did forward it to all the commissioners. I don't know if they had time to review it. And thank you, Jason, for that. This is a pretty good starting point. But I have a feeling that what we should do is discuss how we select and what kind of people we should select to sit on the GALC investment committee, the people that will be sitting there and working on this plan. Because this, I know, is going to take a few hours. We're not going to hammer this out in a few minutes. It might take a half day, maybe a whole day or more of hard work. So maybe we should move into that unless some of the commissioners have any questions. I would just like to establish the committee and start getting to work on this document.
I also think, sir, a good idea would be maybe Jason, you can go through page 6 and 7, talk about some significant, specifically time horizon, risk tolerance, performance, and maybe you could explain that from just a broad conceptual type of point of view. And then that way everyone gets an idea of what we're aiming for with the investment policy statement.
Sure. Maybe Amanda, if we can share our screen, put up the that page.
Can I just interject just for a minute real quick? Just a couple of things I'd like to clarify. So basically, Raymond James, what we understand from Gita is that you did do an RFP and then that's how you secure it. Raymond, is there like a fixed timeline that you are doing the servicing and then you have to, is there you know what I mean? The term of their RFP, is there a, or is it automatically renewed, or do you have to re-RFP, or well, how does that work? Just real quick regarding that.
Sure. So Gita put out an RFP. I want to say it was, Jason, just like a year ago. Would you say about a year and a half ago? Gita put out the RFP. It was right around the time we were meeting back in office again. Like it was, we started a meeting in person again. But Raymond James and BGIS have both historically served as the investment advisors for Gita, gosh, going back several decades. There was a break in time that I believe BGIS was the only investment advisor. And then at the time, there was some movement in funds. And so there was a time that Gita wasn't really doing anything. We were just kind of letting it sit in bank accounts and earning minor interest, not unlike the current situation with the Guam Central Funds. Okay?
I see.
And so Jason, so we RFP'd it out about a year and a half ago. And the rationale of the board was, let's pick two. And then that way, diversification for us is really important, meaning don't put all your eggs in one basket, right?
Same
And
here.
so in as far as we wanted to diversify, not only the holdings and the accounts, but we also wanted to see, how's one advisor and another advisor. We said, let's get some different points of views. And for the most, these guys are great. I've known Jason and Amanda for a long time. These are local kids. Jason's an FD boy. Amanda used to teach at ND before she got smart and started working in finance, and for the big bucks. I'm just joking. I'm joking. So both are and as well as BGIS, on BGIS, there's Alexandra Leon Guerrero. That's Glenn Leon Guerrero's daughter, and Marie Pelkey. Her dad, Bob Pelkey, right? Mr. Commissioner Laguatnia, her dad. Anyways, so these are two young teams, relatively young, close to 20 years. Jason and I are the same age. So close to, Jason, 20 years doing this. You've been doing this since we got out of college, just about. And so highly experienced. They've been, the RFP, I believe, is a 4-year duration contract with them with one option to renew. And so an 8-year total potential contract, but we do have the option to go out after the 4 years. And then after the 8 years, we would definitely go out for RFP. Now, as an investment committee member, what your designated investment committee members would decide is, after this term is up, let's say the 4 years, the investment committee members would decide, do we want to put it out, or do we want to go ahead and renew? So that's another thing to keep in mind. So about 3 years, 2.5, 3 years from now, they can have the option to change it up.
Okay, got it. I understand. I basically was just trying to find out, like, what would happen if we're still in the middle of let's say a term investment or time investment thing, and then their service time is up, and how does that work when we're still the funds are on a time investment type of thing, and then their contract.
Yeah, it's really the contractor, the vendor, Raymond James and BGIS are the platform upon which we transact, but the investments can remain fixed regardless of who the advisors are. So for example, if you bought Google stock, Jason could be the one buying the Google stock, but then, maybe Jason makes us mad, or something like that. Jason, he says something that, I want to beat him up or something. And
he combs his hair wrong.
Let's say Jason and I start fighting, and I say, Jason, I don't want you to do this anymore. I'm going to move all my money out and put it over at, E-Trade, right? And that's an off-island provider. Then the Google stock would stay, but the platform would change. Jason, is that accurate?
You answered my question. Very good. That's basically what I was after. Okay, we can continue.
I have a question. I have a question. Yeah,
Chair.
Jason just mentioned in an introduction, but I heard Asia Pacific. Are they in on this?
Raymond James is, Raymond James, their office is called Raymond James Asia Pacific. I think you're distinguishing them from Asia Pacific Financial Services.
Oh, that's separate?
That is a different firm, yes.
Oh, okay, okay.
Yes.
I just want to make sure.
Our
Okay, we
actual
can,
official name is Asia Pacific Group at Raymond James. We're the office of Raymond. We're an extension of our headquarters in Florida. So we're actually a branch of Raymond James. Raymond James, of course, as you probably know, is a publicly traded corporation. RJF is a ticker on the New York Stock Exchange, a Fortune 500 company, very large conservative financial firm. And that's one of the reasons why we brought them to Guam back in 2015.
okay, very good. Before you continue with the, I guess the IPS, right? We call it, it's an investment. Could you basically just, not now, but afterwards, maybe you could highlight certain sections of that, the policies that you'd like us to home in on when we're reviewing it? We just basically got the policy draft from the director. I'm not sure that's a draft, that's a statement, right? That's basically, yeah, so basically.
Yeah, this is a draft. It's a draft until you adopt it, Mr. Chair.
Oh, okay, so there's, because I did get to review it quickly, and yeah, it is boring. But if you could basically, direct the board to, highlight or bullet point some parts that you want us to pay particular mind to, that would be very helpful. Thank you.
And
Okay,
before we turn over to Amanda, just keep in mind that, we're here to help you as a board. We're here to ensure that, you are fiduciaries in the decisions that you make. And for those who know what a fiduciary is, you're basically a person in charge of something else that the public holds a higher standard. And we are in a public meeting right now, and we manage a number of public funds throughout the region. But essentially, we're helping you to ensure that you're following your plan and doing it legally and ensuring that you stay out of trouble. And that's really because when we get hired and we're working with you, we're co-fiduciaries with you alongside. And so we're going to be doing our best, not only to try to make you money, but also to help you ensure you have a process in place that if there's any issues, whether it be an audit, whether it be a lawsuit or things like that, that you actually have the documents in place to help protect you on the side. So this document is one of the most important documents. The first thing that we do when institutional consulting, when we first start an account or a client, this is what we do and we put together. So I'm going to turn it over to Amanda, and then she can walk you through the executive summary. So, Chair, the first couple of pages are actually the most important, which is the executive summary, and then it goes into details and has a table of contents. And yes, it's 21 pages, and you can make it as long or as short as you want. But the key with an investment policy statement is that you want to make it detailed enough that an average person off the street can actually understand what you're doing with your investments, but not too detailed enough that you cannot follow it to a T, that you're ripe for litigation or any lawsuits. So we try to keep that balance in place when we're putting together these documents. And these are legal documents too, that as a public fund, you would put up on your website that anyone can scrutinize. And this is one of the first documents that the auditors, if they ever get audited, whether you get financial audits for loans or things like that in the future, this is what they ask for, and then they review it and they make sure that you're actually following your plan, your investment plan. So I'll turn it over to Amanda. She can just real briefly go over the executive summary, and then we can highlight some of the sections.
Well, first, I'd like to recognize that Secretary Treasurer Cruz just logged in. Welcome, Commissioner Cruz. And Commissioner Rios informed me that he is still off island and unable to attend. Okay, Mr. Chair.
Noted.
Okay, Amanda, it's your floor now.
Thank you so much. So I can't share my screen if I can get access, or if not, I can just verbally go through it.
Joey, could you make her a co-host so she could share her screen?
Perfect. Okay. So this is the IPS that everybody's been talking about gotten pretty infamous, I think, by now. But really the key parts I want to focus on are going to be the executive summary, the background, the funding and spending policy, and then just the acknowledgement of the investment policy, just as a statement. So looking at the executive summary, this really does tell you a lot about what you're going to be invested in, how much you have, what your planning time horizon is, your expected return, your risk tolerance, and then where you're going to be allocated within an investment strategy. So here you just see it's the name of the fund is going to be Guam Ancestral Land Commission Agency. It's going to have about a $15 million market value. Of course, like this will change. We go through the IPS every year to make sure that it is something that is still in line with GALC's policies. The expected return. So what do we expect from our investments year after year? It's not going to be 2.22% or 4.82% every year. You're going to see some years where it's going to go higher than 2%, some years where it's going to go lower than 2%, but annualized over time, we expect to see that this is going to be around what we're shooting for. So these are really important numbers to know. It's also a reflection of your asset allocation and your risk tolerance. So right now, and this goes right into this, you have two funds, and this can change, but one is going to be the conservative balance fund, and this will tell you how much equities and fixed income you have. I'm not going to go too much into that, but really it's saying that you're not going to be very aggressive with this money. You're not going to be 100% in one stock that can go, you know, tank all the way down or go all the way flying high. You're not going to feel those highs and lows in a conservative balance fund or even a moderate fund. So that's all reflection of your expected return. And then the asset allocation tells you where you're going to be at in the different parts of the market. So will, as you get further along in this process, then we'll start to show you some different allocation models and how it's going to fit into the overall investment plan. Does anybody have any questions about this?
So one item of note, commissioners, is that you don't have to be conservative. You don't have to be conservative, balanced, moderate. This is just a placeholder for now. What happens is, as we get more into the detail, the investment committee members, they assess the risk tolerance of the organization. When do we need to tap this money? What kind of downside if the market goes down, can we handle it if it goes down 5%, 10%, 15%, 20%? What's your risk tolerance? And then from there, that's how the fund conservative and moderate, that's how these are determined.
Yes.
A quick
the
question. A quick
Sure.
question. Have you managed any other government trust funds before? Are we the first ones?
No, we do have other government trusts. Oh, Jason wants to chime in. Go ahead, Jason.
Yeah, so we manage a number of government funds to include that we won via a public bid, Guam Economic Development Authority. We manage University of Guam's endowments and endowment foundation, Guam Community Colleges Foundation. We manage a number of public funds, 100 million, 120 million up in Saipan, Marianas Public Land Trust. Our team manages about 1.75 billion in assets just in our office.
Okay,
So
very
we've grown
good.
quite a bit.
Very good. You've answered my question. Thank you.
Thank you.
Okay, continue.
So the statement of purpose, I'm not going to go through this, but this is what this policy is for. But really the next thing I want to talk about that is very specific to Guam Ancestral Land Trust is your background, making sure that this is who you are, because this really does bring the policy over into your realm. Who is the sponsor, the name, the executive director, and then of course the oversight. Who's going to be the ones who look at the IPS and the investments at least quarterly and make sure that it is doing what it's supposed to be doing. And then the next thing I wanted to focus on that is something that you might want to truly highlight in your next meeting is this, which is the funding and spending policy. We have this in here as a placeholder, but this will just tell you how you want to spend the money, how you're going to fund the investments, and you can be as detailed as you want with the funding and spending policy, or you could be as broad as you want. This is something that is a little bit of a check and balance. that you might want to spend just a little bit more time over. And then we can answer any questions about if you need any help with examples of different funding policies or different spending policies. We can definitely help you with that. And then finally, a lot of this is just talking about the different investments, the fiduciary process. The last thing I just want to go over is at the end of all of this, right, you're going to read through this investment policy statement, and then what GALC is going to do is they're going to sign off on it. And what this means is, and then we're going to sign off on it as well. And what this means is that we're acknowledging that this is the investment policy for the Guam Ancestral Land Commission, and that we will be following this moving forward. We're going to review it every year. It doesn't have to change every year, but it is something that we'll constantly go back to when we go to your meetings, when we talk about asset allocation, risk, and all of that. So that was my very brief overview of an investment policy statement. Does anybody have any questions?
Sorry, if I may interject before we go into questions. The whole point of investing, or actually the starting point with investing any funds, and it's taught in many courses throughout the investment curriculum, is number one, first thing we have to figure out is a time horizon, right? So when I say time horizon, and we put in there on the, if you can put in the executive summary, Amanda, greater than 5 years. And so that can be anywhere from 3 years to 5 years to 10+ years. So this is all customized to you as an entity. An endowment or a foundation has a long-term time horizon, 20+ years. So we can be highly aggressive. We can ride out many market cycles. When I say market cycle, you're talking about 6 to 8 years. We're going through a market cycle right now, or market correction right now. And then something like a bank or an insurance fund would have a shorter time horizon. Let's say 1 to 3, or even at most 5 years. And they're very limited in what they can invest in per banking and insurance regulations. And so you have to determine that time horizon first. And I think the goal at the initial meeting when we met with Director Birch and some of the commissioners at GIDA's offices was to hopefully design something very similar to what we do with GIDA, along with Bank of Guam Investment Services with Ali and her team, is to design essentially different buckets. You have a conservative, you have a balance, you have an aggressive. On a scale from 1 to 5, 1 being most conservative, 5 being most aggressive, you can bucket it that way. And you put pools of funds into the different buckets so that overall you have a good expected return. But if you're going to be spending money more frequently in the initial interim, like the 1 to 3 years, you would want to put that in the conservative bucket. If you have a longer term bucket where it's more than, I would say 7 to 10 years plus, then we can get more aggressive with that and have more equities in there, stocks in there. And then the balance would have a combination of stocks and bonds or fixed income in there. So that's something that commissioners really have to come together in terms of how you decide yourself as a commission, as a Central Lands Commission, how you want to invest the funds. And starting with time horizon is very important because it allows you to really, if you have you've probably heard the mantra, the longer time horizon, the more risk you take, the greater return you can expect to receive. The less risk you take, the less return you can expect to receive. So for example, you go into a bank or even us, you have a TCD or a certificate of deposit. You lock it in for 6 months, and you've been doing that already with Coast and with some of the financial institutions. And rates have come up now, right? I mean, I think our 3-month CD now is at upwards of 3+% because the Fed has already raised interest rates. Well, those are guaranteed investments. You're not going to lose money on that unless the bank goes under, right? But you can avoid that by actually putting it to many different banks all across the nation, which we do for a number of our clients. And we can FDIC insure the entire, $10-20 million as an example. That's your conservative bucket, or even ultra conservative bucket. And then you have, different allocations along the line. So you as a commission have to decide, how you want to approach this investment plan. And, we'll work together with you to come up with these solutions and the recommendations. But that's really more, and I'm just trying to throw some ideas at you so that you have a better idea of how you want to determine how you want to make money with the current funds, because you're basically coming from cash, an ultra conservative cash management type of a position, which I assume you're going to keep a portion of it as you spend some of that. But at the end of the day, you're also wanting to grow the fund and make it a trust fund and have it grow into perpetuity, so that you're essentially, what I see with the trust is that you're going to be making money and just earning the income and spending that out, whether it be, as Manda said, a 5% spending policy, for example. So the trust will continue to grow and you're just spitting out the dividends and spitting out the income. So I'm going to stop there and ask any questions.
First, I'd like to advise our Vice Chair, Laguardia, Vice Chairman. The chairman just informed me that his internet, he got knocked off the internet somehow.
Oh, okay.
So I guess Vice Chair, you'll be chairing now until, or unless if he
Okay.
can come back in. Okay.
All right. Go ahead, proceed.
Yes. I know, Jason, you were just speaking, and I know I got interrupted by my phone ringing off here on that. But Mel, yeah, you have a question, or you had your hand up.
So thank you, sir. At the last, so at one of the most recent commissioner meetings, Commissioner Camacho and Commissioner Cruz were volunteered as the representatives to the investment committee. So our recommendation from here would be to let Commissioner Cruz and Commissioner Camacho and whoever else would like to volunteer dive, headfirst into the crafting of the IPS for its adoption at the next regularly scheduled Guam Ancestral Lands Commission meeting. Unless you all have a burning desire to go through the document today, or to go through parts of the document today and parts of the document at another meeting, whatever's practical, whatever you're most comfortable with. And I do also want to point out that, remember, the role of GITA here is like your big brother in the investment committee. So you're not navigating this alone. So you do have the advisors, the contractors, but you also have your fellow investment committee. Our current investment committee chair is our vice chair of our board, Joan Espaldon, and Diego and myself attend all the investment committee meetings so as to make you feel supported, so that you feel supported throughout this process.
Okay, our chairman is back online. I see him. Welcome back, Chairman Clavea. I would. Yeah, I would recommend to our commissioners that we need to. This is going to be a long process. It's not something we're going to be able to knock out in a regular session or in a special committee meeting like we have right now. I would recommend that we set up and allow, I guess, the two commissioners that started off with us about 3 weeks ago on September 9. That's Commissioner Camacho and Secretary Treasurer Cruz, to continue on and to start working on the strategic planning work session. We should have work sessions together with GITA to hammer this thing out and then present it to the Board of Commissioners for their approval, or for any changes that they may want us to go over again. But that's the quickest way I know we can get this thing worked on. Is to have the work session. And these work sessions are not going to be short, 1/2 hour, 2 hours. It'll probably be a half day or whole day, hopefully not forever. Hopefully with GITA's assistance, we'll be able to move through this a lot quicker. But we do have to, and this is the first step, to set up our investment policy statement. So I wonder, I would recommend that to the commission to allow us to have these work sessions and to continue the work that the two commissioners have put into this. Mr. Chair.
Okay, very good, Director. I just got a couple of, I'd like to put some input real quick on the, just real quickly about the history of how we got to this point. Throughout the years, again, we've been advised to invest our funds, and we had some other suggestions from some prominent senators and the like. But we ended up finally moving towards addressing the issue of having our our funds, like you said, just in the local banks. What we did was we did entertain throughout the years two companies, managers, investment managers, and one of them was stateside and the other one was local. And I think that they were about 7 or 8 years apart when we got these proposals, and we never acted on them. But I recall that with the board asking questions, we were very concerned about our fiduciary duty to the trust. So basically, we just wanted to really address the issue with having our funds just kept in the local bank, and just how responsible would we be by, and how far should we go with investments. So the board was kind of on the trying to err on the caution side by just saying, hey, let's just get it out of the banks, put it in non-aggressive, safe investments, in particular maybe bonds or the like, where we're not, there's very, very low risk. So that's what the board was looking at, since, of course, we're not experts on it at the time. We just wanted to find a way to just get it out of the banks and maybe not sacrifice our fiduciary duty to the trust by, just investing it like in the stock market or whatever. So that's what the question should be. Should we be moderate or moderate aggressive, safe, just play it safe? That's where we're kind of, in the dark with on how far to go, and whether, if we do go medium, moderately aggressive or aggressive, are we sacrificing our fiduciary duty to trust?
So,
So
Mr. Chair, I think Jason made it clear that they could insure our investments up to the total amount that we decide to put into their care. Right now, we're only insured with the bank, I believe, up to $250,000 by the FDIC, and should the bank collapse,
exactly.
that's all we're going to have. So that's
Now, what I'm
extremely
hearing-
risky.
What I'm hearing from, I'm sorry to interrupt you, sir. What I'm hearing from the chairman is, how is the board to know whether we're conservative, moderate, or aggressive? Do we just say we're conservative? Do we just say I'm feeling moderate today? What are the determining factors? What are the factors that determine the risk tolerance of the board? And Jason, maybe you can address that question. And in your observation, how other boards with a similar makeup have addressed their risk tolerance?
Yep, that's a great question. And as I mentioned before, it really starts with time horizon. How long can you invest your funds, right? How long are you able to essentially invest and keep your funds invested without making any irrational decisions? So that's why we were suggesting just different buckets: conservative, balanced, and aggressive, and decide how much in each of those buckets. Now, at the meeting that we had at GITA, one of the questions that I did bring up was, when are you going to start using these funds, paying out, right? And I think Director Birch was mentioning that it has to go through legislation. There's going to be some time, upwards of maybe perhaps 3 to 5 years. Hence why we put greater than 5 years on the investment policy statement. That's something that we can craft and essentially customize for you. So you have to decide as a commission, what is the actual goal of the funds? Is it one? Yes, I understand. You want to make more money than you're making in the bank in CDs. And so you can design a plan to do just that and continue to have essentially all your fiduciary responsibilities all taken into account by following your investment plan. Now, I want to reiterate, I know Nicholas Toff is on here on the AG's office as an attorney, that you can never mitigate all of your fiduciary responsibility. You cannot claim negligence for not voting, and you cannot, we've gone through this with many, many boards in the past. And even if, one board member is directing everything, or we call it an alpha board member, the rest of the board has their hand in the decision making. So at the end of the day, if you ever get sued, if you ever get put on trial, you're going to have to answer to the judge and to the jury, like, why did you make that decision? So this is the process we go through with, you have to document everything you do, especially as a public fund. And this investment policy statement is the first thing. One of the things that we tried to look for in the laws, was there any restrictions in what you can invest in? And working with Mel, we did the same thing through with GITA. And there really wasn't anything that I could, again, if your legal counsel can advise if there's any restrictions per Guam law, that would prohibit you from investing in any type of an asset class or investment, we want to know that. And we did our research, we couldn't find anything. So essentially, you have free reign. So we designed the investment policy statement so that you can invest in pretty much anything. But you as a commission decide how much or how aggressive you want to be. Because at the end of the day, we'll make our recommendations. You tell us 5 years, you tell us 10 years, we'll come up with some recommendations on the table. And that will be probably the next or the working session with the investment committee. We'll build an optimizer. We'll show you maybe 5 or 6 different models. We'll show you, how each risk and return metric works. As I mentioned, the more risk you take, the more return, the less risk, the less return. So, you decide as a in committee and even as a board how much risk you want to take and how much return you want to get expect to receive. Now, I just want to just caution the board and just we don't guarantee anything. There's an investment, our legal language and any contract you sign, there's no guarantees with investments, right? And that's really important to know because you're taking risk and you could lose money, right? You give 10 million, it can go down to 8 million. It can go up to 12 million, it can go down to 9 million, it can go up to 14 million any given year. But over the long term, right? Give it 20 plus years, you will make money in the markets because that's how we have historically, we have shown that if you just give it time and over market cycles. Right now, let's say you start January 1st and you're invested in the stock market, you will be down. You will have a negative return as of this year. But that's only if you're 100% stocks. If you have a mix between stocks and bonds, you won't have as great of a negative return. If you're a mix between stocks, bonds, and cash and CDs, that return number actually gets lower and lower. So, we build the investment pool together with you to see what's most comfortable with you as a commission. And if you're telling us you want to just kind of take baby steps and get into it, that's perfectly fine with us. But we'll show you all the options on the table and you can decide at the end of the day.
Very good. Thank you. Any other questions from the board? I have one more question. What happened? Do we have options, just real quick, regarding, let's say, for instance, we went for less than a year or less than 2 years, and do we have options if we needed to disperse some of the money? Can we? What are the options for withdrawing the money early?
Yeah, so in our books, anything less than a year, you don't want to be invested in the markets. You want to keep it in cash and CDs because there's too much risk involved in investing in the markets for a time horizon of less than a year. If you give a 1 to 3 year time horizon, then you're going to start to put fixed income, some bonds in there. Our 10-year treasury in the US right now is yielding about 3.7. So that's the return you can expect from a 10-year treasury bond. And then you build a portfolio around that. So on average, let's say anywhere from 2 to 4% net of fees is a pretty reasonable return for an investment of 1 to 3 year time horizon currently.
I see. So if we have situations where we might be we'll have situations where we have to disperse.
Yes. So withdrawals, unless you're in CDs, there's no penalty for withdrawals. Like we do with Gita, we're going to show you the same type of investment pool.
Okay, let's say we have
3 to 5 business days to liquidate funds.
Okay, let's say we have $2 million. Could we just withdraw the 2 million?
You can.
You
can liquidate.
Okay.
3 to 5 business days, you can liquidate and wire transfer.
Yeah. Okay, got it.
Jason's only caution is that let's say you put the $2 million in stocks and you started off at 2, but then the market was volatile and it went from 2 million down to 1.5 million and it's time for you to sell. You not only sell that 1.5, but you have to sell something else to make the 2 million rather than waiting for it to come back up. And then at that's the reason for not recommending anything less than a year. If you think you're going to need it, don't put it in. Don't lock it up. Right.
I see. So that's where the CDs come into play with this.
That's where something like a CD or even Jason, you guys can do like money markets. You can do short term, like 30-day things. Right.
Awesome.
Cash management strategy. Yep.
Very good. Thank you.
1%, 2%. Yeah.
Okay.
And Mr. Chair,
Commissioner, I'm sorry, Vice Chair, Commissioner Camacho,
Yeah.
I think you have your hands
Oh,
up.
go ahead.
And then Commissioner Camacho? Angie? Did you have your hands up? I'm sorry. Oh, that's okay. That's okay, Vice Chair.
Yeah.
Vice Chair.
Basically, in the short term, there you're basically also will be paying for such services that these that our investment partners are doing for us.
Oh, I see. Yeah.
That's correct. Yeah. So we'll charge an asset-based fee. Because we're working with Gita, you're going to get that same fee. Essentially, actually, the fee will drop because you're adding even more into the, the overall pool that we're already managing for Gita. But it's just an asset-based fee, and the key with that, Vice Chair, is that we're actually on your side. We make more money when you make more money. We don't make as much money as when you actually are down. So our goal is to ensure that you're making money net of fees and above benchmark, and that's really the goal.
That's what I was just adding. That's why I was just adding the point that within a short period of time, you need to allow the investments to work its way to whatever goal we have, and which is in a positive and assertive way. Yeah, I did review the IPS, and Mr. Chair, without any due of time, I'm in agreement to allow the two commissioners to proceed to become, and we adopt them as the members.
Okay. Commissioner Cruz, I'm sorry. Commissioner Cruz, you had your hands up, and then
Yes, I have a question. Suppose we have our the money there in after 1 year. How much? And then we start. There's a need for us to start dispersing to the eligible beneficiaries of the funds. How much notice do you need for us to let you know that we need that money? You need 30 days notice or less, because this is all a matter of planning. Of course, we will not tell you abruptly that we need this money as soon as possible, because that's part of the planning. Once we get our policies and procedures, especially the release of these fundings, once we get that in order, there'll be a time frame timeline when we're going to disperse. So it won't be in 10 days, that's for sure. So is there a minimum date to, a notice to provide, so that we will not be penalized if we are to be penalized? I do know that investing should be at least 1 year. And I know that if we were to start, we are certainly not going to be able to finalize those policies and procedures in 1 year's time. So let's say in 6 months, there's a new revised public law, and our disbursement on who's eligible. And then we have, in the meantime, we'll be working on the methodology on disbursements of these funds, and then we'll be giving notice. So that's all going to take a while. So
yeah, it's a great question, Commissioner Cruz. And just to reiterate, as I mentioned before, 3 to 5 business days is all we need to get you 3 to 5 business days, because we have holidays sometimes in any given week. So within a week's notice, we can get you cash into your bank. These are liquid investments that we're investing in. We're not going to be recommending any private deals or anything like that.
Very good. Very good. So that's 2 to 5 days. Commissioner Wessing.
Yeah, Mr. Miyashita, just curious, at what point are fees charged, and what would be the average, I guess, percentage fee that we would be looking at?
Yeah, and so we actually haven't worked that out yet with Mel in terms of the actual contract, in terms of how we're going to set this up, because we're still trying to figure out the authorization, who are the authorized signatories and things like that. My assumption is we're going to be writing on Gita's contract, and that's how essentially we're going to do it. So you're going to be adding to the Gita portfolio, both Raymond James and Bank of Guam Investment Services. And essentially with the contract we have in place with Gita, it's a waterfall fee schedule. So the more assets that they have, the fee drops. I believe, Amanda, if I'm not mistaken, it's well below 1%, I know.
Yeah.
I don't know the exact fee right now. Off the top of my head, for us at Raymond James, I'm not sure what Bank of Guam is charging, but that is essentially, it's an asset-based fee. It's charged quarterly, and it's billed quarterly, but it's an annual fee that we're quoting. Maybe Mel, you can opine.
Yes, it's an asset. What we wanted at Gita when we placed it in the RFP was something that was assets under management. As Jason had mentioned, the more the assets go up, the more the fee goes down because I guess that's just how it works. No, but economies
no,
of scale.
Yeah,
It is this. I know that this is this is considered at this level an institutional account. So we're definitely getting cheaper pricing than a typical retail account. So if we were just going and opening up like a brokerage account at, on E-Trade, under Melanie Mendiola, my fee would be 1% or 1.25%, whereas something like this, an institutional account would be more like 75 basis points, 0.75 or 0.60.
right.
And it goes down as the asset level goes up.
Okay, yeah, I understand the concept of the bigger the volume, the less per unit cost. But I guess I just wanted to find out, like, is there a fee charged at the time of investing the money, and then another fee charged at the time of liquidation and distribution?
Are there any commissions for transactions, or is it just the assets under management fee?
It's just an asset-based fee. That's a great question. We don't charge commissions because essentially
Okay.
when we invest, this is how we invest pretty much all of our institutional accounts throughout this
Okay.
region. Your managers are trading every day. They're buying and selling. In markets like this, you want to be trading, take advantage of inefficiencies in the market. So there's no commission. And even at that, the dollar value we're talking about, you're only going to see the asset-based fee, the institutional consulting fee, and the manager fees. That's the only fees you'll see. There's no admin fees, wire
Okay.
transfer fees. Yeah, you're not going to see any of that.
Okay.
Very clear cut. It's a very,
Thank you.
essentially very transparent relationship. That's how we thrive as a team and dealing with government funds, is that you have to be very transparent. That's really key.
Okay, thank you for that clarification.
Okay, at this point in time, I'd like to echo the director's plan, his timeline. It looks and I appreciate everybody's input and the presentation, Gita and James. Do we have any further questions?
Yeah, just a comment, Mr. Chair.
Sure. Vice Chair.
Just keep in mind that we are in the times of inflation, and the economy is volatile right now. So you expect that, right, Jason? You can expect that it's gonna move. It's gonna keep going down, starting now all the way to January. So, but if you said the S&Ps are climbing, they're doing good. But explain the situation, Jason, right now, our current situation to the board.
Sure. Yeah, I can talk all day about this. I mean, essentially, the markets are volatile this year because of inflation, right? I mean, the Fed pumped in, was it $4 trillion because of COVID? We're coming out of a global crisis and a global shutdown. And we've never experienced that in the history of the markets, where everything in the world shut down. And what did the Fed do? They came out and printed dollars. They bought back bonds. And so they created inflationary environments that essentially, as of beginning of this year, started to unravel. And inflation, when you print so much money, inflation goes up. I mean, for those of you who remember the 80s, inflation was rampant. Do you remember the 16% CDs and savings bonds you can buy? Until Paul Volcker, came in, right, the Treasury Secretary at that time, and essentially, during the Reagan administration, and essentially cut rates, right? So we're in that same environment where we're in really high inflation, and the Fed is, in our opinion, they actually erred in terms of waiting too long to raise rates. Our terminal rate, meaning our federal funds rate, we really should be around 4 to 5% right now. And so they're catching up, and the market essentially trades 6 to 9 months ahead of what actually is currently going on. We don't think we're in a recession right now in the US, frankly, because the jobs are there. You just can't have enough jobs. There's not enough bodies to hire. I mean, look at all around, even here in Guam, you can't hire enough workers. We do think we're probably going to recession next year. And even at that, it will be a quick recession, maybe 1 or 2 quarters. Because essentially everything revolves around corporate earnings and corporate profits, And what did the corporations do during COVID? They hoarded cash. There are trillions of dollars in cash in corporate balance sheets right now. Hence, there's a lot of mergers and acquisitions going on right now as we speak. I mean, look at Elon Musk, right? I mean, he essentially tried to buy Twitter. And so, I mean, things like that, where you're seeing so much acquisition and mergers in an environment right now where there's instability. But the market goes up and down. We know that as a fact. Any given year, market go up and down. But if you look at it in a 20-year, or even go back since the market started in 1923 on the S&P, I can show you a mountain chart, and that's one of the things we educate our clients on. You will make money in the markets. Sir John Templeton said, has a great quote, it's not timing the markets, right? Because we don't know where the market's going to go. It's not timing the markets, it's time in the markets. And that's how you become successful in investing. And you have to set a plan, you set a strategy, and then you let it ride with the quarterly monitoring. And that's really the key by the board and us as advisors working together and ensuring you're meeting your goals in terms of, your conservative, your moderate, or aggressive buckets or whatnot. And so that's really the key with investing, because we don't know what the future holds, right? I mean, the best we can do is invest. But if you're looking at really trying to make money, this is one of the best things you can do, and some of the best times you can see right now.
Thank you. Long-term investment. Yeah, thank you for that explanation, Jason, so that the other members will know how it works. So, because for short-term investment, it's not going to gain any. To me, it's got to be at least a long-term investment. Thank you, Jason, for explaining that.
I have a question. I guess
Yes,
I can go ahead and
Commissioner
ask it.
ahead.
Jason, can you give us a hypothetical figures on that risk tolerance? Let's say using $1.5 million. Any figures?
Yeah, so on the IPS that we mentioned, Amanda said there was actually rate of return highlights. And the conservative model that we had, and this is going back 20 years and now adjusting even for this year's correction. So conservative return 2.22% and a moderate return of, what was that? 4.82%. And a conservative return in that portfolio, you have about 30% stocks and 70% bonds. In a moderate return, you have about 50-50, 60-40, 60% stocks, 40% bonds. So what I would say, Commissioner Cruz, is that, a conservative portfolio anywhere from 1 to even upwards of 5 years can return net of fees anywhere from 2 to 3% right now. More balanced or moderate portfolio can return anywhere from 4 to 6% right now. So all net of fees. And so that's really what we're trying to honing on. We're not shooting for the stars here. We're not going for 15, 20%, right? This is not, highly aggressive. We're taking baby steps. And that's why when we put this draft together, our team, we just put together a conservative and moderate portfolio. I can add an aggressive model on there, and that will likely run around maybe 6%, 6 to 8% return plus. So that's kind of a good gauge in terms of conservative, moderate, and aggressive in terms of the expected returns. And that's going back 20 years. Does that make sense, Commissioner Cruz?
No, still. That I'll be asking you the question again. If I'm not, I'll try to calculate it, but and I'll check with you. That I usually like to get figures, just to give us an idea.
Yeah, the question
I
is,
can put it
I
in
have a
dollar
question.
terms.
Yeah,
Okay.
I have a question. Yeah, okay, now, Jason, just explain to them that, once we get into those investment timelines, whether it be aggressive, moderate, conservative, we can change those, mix them up anytime during the duration of our investment, correct?
That is exactly right. Yeah. And you can
That's-
decide how much you want to put in conservative.
That's right.
Whether you want to put 80%
Right.
conservative, 20%
Yeah.
moderate, or 50-50, it's
Right.
really up to you.
Yeah, that's good, because that's when we can find out when the market is good, then we go aggressive. When it's not, we go conservative. So that's how it works. So I guess just some of us don't have investments.
Just from the experience of Gita, the market just went through a bull run of, oh my God, probably
Absolutely.
12 years. 10, I don't know, Jason. When was the last market correction? Like 2008?
Yeah, 2007, 2008, which is the financial crisis.
2008 was the
market.
housing crisis.
Mm.
So if you can imagine, double digits it's not common, right? But or double digits were occurring, double digit returns.
Mhm.
But then this year, I mean, the market is just it's horrible. But I mean, and I kind of feel like it's horrible regardless of whether you're conservative, moderate, aggressive, but you're not losing as much if you're conservative, right? But I think the big thing is definitely the long-term horizon, that the deciding factor here is really the long-term horizon, because you can go conservative and every year you'll get 2% or 3%. So on $15 million, 3% is $450,000. So you can get 450,000 and then a little bit more because of compound interest and a little bit more. But then when the market goes down, you're probably just going to have a zero return or a slightly negative return. Whereas, if you were doing something very aggressive, maybe the first show you'll get 10%. So it'll go from 15 million to 16.5, and the next year you're going to say more aggressive and 16.5 to 19 million, and then the next year keep it aggressive, and then it'll go down 25%, and it'll go from 19 to 14.5. So these are I think this is where the time horizon is incredibly important, and specific to the commission. The mission of this group is, of course, to be fiduciaries and look after the investment return, but balance the investment return with the time horizon of paying out the beneficiaries of the Guam Ancestral Lands Commission, right? The ancestral owners.
And that's the purpose of that quarterly meeting, so we can continue to review the investment and obtain the recommendation of the of the investment services, on the investment services.
Okay, I believe the chairman is offline again. I'll continue. Is there any other questions from the board members? If not, I believe we can just move forward and move to approve the two commissioners as members of the investment IPS.
I have a question. Does anybody else want to join us? Any other commissioners? Oh, okay.
Mr. Director, I believe, yeah, I'm ready to move forward. If the chairman doesn't have any other questions, we can just move forward. And yeah.
Mr. Vice Chair, I guess you are now the officer pro tem because we
Okay.
lost the chairman. So you're chairing the meeting now. So
Yeah.
I do recommend that our two commissioners, they've been involved with this and they show commitment. It's going to be a tedious process. It's not going to be a very easy one, but they've shown commitment to getting the work done. So yes, I would highly recommend them. So
Yeah, I
if
understand.
the commission would
Yeah.
take a vote and appoint them officially.
Okay. Yeah, basically, yeah,
You need-
we
need a
have our
motion.
the IPSs are there. That's what they're there for. We're paying Raymond James them to handle it with Gita. We're all banking on all with Gita. Okay, so that's the bottom line on that one. So, okay, we'll move. Any motion to adopt the two commissioners into the investment policy committee?
I second that motion.
Oh, there's a who motioned it first?
Oh, I'm sorry. Mr. Chair, I thought you were making the motion.
No, I'm acting as chair. So is there a motion on the floor?
Yes, I'll make that motion. This is
Okay.
Commissioner Louisa Westling. I motion that we approve the appointment of Commissioner Maria Cruz and Commissioner Angela Camacho to represent the Guam Ancestral Lands Commission in the Investment Strategy Planning Committee.
Okay, there's a motion on the floor. Is there a second? Call for the question again. Is there a second on the motion?
If I'm allowed to there it is.
I'll second the
Thank-
motion.
Okay, seconded by Commissioner Orlino. Okay, is there any discussion? Any discussion on the motion? There be no discussion. We call for the vote. All in favor, say aye.
I,
Anyone say nay? Okay, motion passes.
Thank
Okay,
you,
Mr. Director.
commissioners. Thank you. I'll start working with Gita to set up work sessions with the two commissioners so that we can start to hammer this the IPS out as soon as we can. I do know that a recommendation was made from Raymond James that there is a conference that is going to occur, but I'm not sure. I need legal to review this to see if we can have funds to send the two commissioners to this conference. It's going to be in the Philippines. But we don't have I went through our budget for the appropriated funds. And of course, in the budget, as they do every year, they limit or restrict any funding source that's appropriated to be used for any travel. But I see this as an investment into training, where now we would have members in our commission who are trained in this. And this is to get training in, let's see what's on here. They're fiduciary essentials and accredited investment fiduciary training.
Sir?
So
Director?
yeah, I was wondering if they have to take all that. So I was going to ask Amanda, is it recommended or mail? If it's recommended through you, or how can we handle this?
Sir, yes, Gita, we recommend that there be fiduciary training for all the commissioners, but perhaps in the interest of, fiscal responsibility and so on and so forth,
Yes.
maybe we rotate, right? So maybe you send two, and then another training and then you send the next two, and then the next two, where at some point in time, all of the active commissioners go to the attend some sort of fiduciary training. And so this is, as far as I know, this is an annual conference. The question I was going to ask that I'd like to the Gita and both Guam and Central can look into is similar to how Gita maintains. Let's say you have a rental with or that we're managing. If we're placing a contract to like to paint a building, let's just say, then the Guam and Central Lands Commission is absorbing that cost out of the rental proceeds, right? In the same regard, could the investment account reimburse a cost associated with an fiduciary training? And so that's something that we're looking into on our side. And then I think that we were going to ask you, Director Birch, if you and legal counsel can look into on your side, because these would be any fiduciary trainings would be expenses related to maintaining the investment accounts. None of these are required, but they are good practices. And it's something that Gita would, we are sending, we've had employees attend in the past. And this year, our chairman is actually is one of the presenters. This is something that maybe I think should occur on like a rotating basis. I mean, because it's the first year, of course, you can probably send more. But it's really up to you guys. But just for prudence sake, fiscal prudence, I'd say, maybe send 2 or 3 this year, send 2 or 3 next year, something like that. But it's completely up to you.
Yeah, that's what I was going to bring up. And Nick is online here with me. I did pose that question to him. And when I did go through the budget law that appropriated our funds, it restricted us from using those funds for travel. And that's why I was wondering if, just like what you were saying, that this is an investment, and it's the same thing, it's an investment in a land bank, the same way as whenever we repair a building, we're investing in those buildings. So we do use the land bank funds. Are we able to use land bank funds for this, since it's not an appropriated fund? we're restricted from using appropriated funds, but it doesn't say anything about non-appropriated.
So I think if, as long as the board votes on it and votes affirmatively, that they can.
Okay. So now I ask the board to be fiscally responsible, because I was looking at the price tag of the training. It is, I believe, very important, and Raymond James recommended at our meeting on September 9 that we seriously look at sending those in the investment committee to these things so they could learn or a little bit more. I mean, right now we know very little about this. We're at the very entrance of investments. We're currently limited to what we've done with the banks, and we're earning about 0.5% interest on our investments there, and they're only insured up to about 250,000. So we are experiencing, or we are taking a big risk, leaving everything in one bank. With this, we would be able to spread it out, diversify, and increase the amount of funds, at least increase the amount of our return on our investment. So, commissioners, I leave it up to you. I would recommend sending at least 2 commissioners, the ones that are initially in the investment committee, and then just like Mel Manjola mentioned, then we could rotate for the next time around. I myself will not be able to attend this because I am committed during this thing is occurring, but I do have one staff member who is very qualified to attend. Of course, that's Kathy Bloss. I'd like you to consider her. But just like Nick Tuff just stated, that we'll make this all public, and if anybody has any concerns about it, they can raise that question. But I've reviewed the law here. I asked Nick the question. He said, as long as we're open about it, it can be done, because we view it as an investment in our investments in the land bank itself.
Mr. Chair, go ahead. Go ahead, Melanie. Go ahead, Mel.
My recommendation, sir, Mr. Chair, would just be for the next meeting, standing meeting. Gita can prepare the brochure and the budget, and such that the commissioners can look at how much it's going to cost every person to attend. And then that way you'll know if you can send, 2, 3, 4. And then that way it also gives the commissioners ample time to review the content, and also to see if any other commissioners would like to also do some training either now or in the future.
Okay.
So Gita can prepare the budgets, the materials associated with this training, and then that way it's all in front of you. You have time to review, and then can discuss in the meetings. Yeah.
Okay.
Sounds
great.
Thanks,
So it be. Anything else on the agenda, Mr. Director?
No, Mr. Vice Chair, that's all that's on the agenda. It's a special meeting just for this, this one issue. We brought everything up. Sounds like we're moving in the right direction. At least we'll set up the work sessions, and we'll keep the Board of Commissioners advised on our progress. One other thing, I know what was mentioned was our next regular meeting that's coming up. That'll be on October 12th, when this will be brought up again. But Mr. Vice Chair, I would talk, and I messaged the chairman to try to accommodate you, because I know you have an obligation from 12 to 2 on Monday and Wednesday.
Yeah.
If it's all right with the Board of Commissioners, I could schedule our start time for half hour later at 2:30, or an hour later at 3 o'clock, to accommodate you, if it's all right with the rest of the commissioners.
Yeah, that would be good, because the times I pick up my grandson too, but sometimes I can be able to make it. But that would be good. That way, give me time to get up there to my, because I really don't like to work on my phone, because I can't really I don't know, with my phone, I just can't sometimes get into I get in, but I can't really communicate somehow.
Secretary Cruz has a.
Because at 2 o'clock, sometimes we go over maybe a little bit after 5, depending on how much discussion. Either move it to 2:30 on Wednesday, or make it on a Thursdays, if it's convenient for everybody. Thursdays.
Okay.
Second of the month meeting at 2 o'clock.
Yeah,
We
But
could
that's
do
I'm
that.
fine.
If, now that, Attorney Tough, your schedule.
Yeah, I'm
That's why we
usually
worked it
in
out.
either for Thursdays afternoons, I'm usually that time, I'm either at a land use commission or Chamorro Land Trust Commission meeting.
That's why we have Wednesday.
Yeah, 2:30 is good.
2:30, you can make it? Okay,
Yeah.
so for the scheduling of that meeting, I'll schedule that for 2:30, not 2
Okay.
o'clock. We'll move it by,
Okay.
that'll give you enough time. I don't want
To
you
get-
rushing on the roads.
Yeah,
you
that's
know,
right.
they-
Correct.
Especially now during the rainy season.
Yeah.
Okay, so our meetings will be moved into 2:30 rather than 2 o'clock.
Okay.
Okay. Yeah, that's the only other concern I had, but I'm glad that this was a big step for us. And I thank all the commissioners and of course the representatives from Raymond James that were here to walk us through this. This is a new step for us. So we haven't done this before. So I hope you just please put up with us for a while. We'll get used to investing in other things than CDs at the bank. So, okay, Mr. Chair, Mr. Vice Chair, it's up to you.
Okay.
If
Is
we're
there
done.
if there are any other questions, comments on the floor right now? If not, if there are any questions, comments, if not, I'll accept the motion to adjourn.
Motion to adjourn?
Okay, so it is. You don't need to be second. It's it's automatic. We are adjourned. Thank you, everybody, for your presence. Thank you to our investment policy advisors, and congratulations to the members. And thank you all for being here in the meeting. Mr. Director, Joey, Kathy, everybody,
And
all members,
Gita,
Melanie and Gita, and I see also Megan there and the other
Yes.
people, yeah, and Antolin, everybody. Thank you.
thank
Then
you
adios
everyone for your
hasta aquí.
assistance. We'll be back on again. Thank you.
Okay,
Adios.
adios, está.
Adios.